On the international business scene, China has warned that severe drought conditions along the Yangtze River could last well into September as local governments race to maintain power and find fresh water supplies to irrigate crops ahead of the autumn harvest. Meanwhile, flooding caused by heavy rainfall in the western Chinese province of Qinghai has killed 16 people, according to state media, with an additional 36 people missing. Asian shares fell on Thursday, tracking Wall Street's losses as the U.S. Federal Reserve looked set to maintain its path of interest rate hikes, although signs it may be less aggressive in tightening gave investors some cause for hope. The dollar rose overnight after the Fed's July minutes pointed to a steady course of rate hikes ahead. MSCI's broadest index of Asia-Pacific shares outside Japan was down 0.4% after U.S. stocks ended the previous session with mild losses. The index is up 1.3% so far this month. Oil price has fluctuated as investors weighed lingering concerns about an economic slowdown against bullish signals from the U.S. and OPEC. WTI traded near $88 a barrel after closing 1.8% higher on Wednesday following a choppy session. Futures are on track for a weekly loss as fears over a downturn continue to hang over the market. The potential for a nuclear deal and more oil from Iran has added to the bearish sentiment. Brent for October settlements was little changed at $93.67 a barrel on the ICE Futures Europe exchange. Speculative options trading is on the rise again among individual investors alongside a rally in so-called meme stocks, reviving a trend that swept Wall Street last year but faded as markets turned volatile in 2022. Trade Alert data showed that trading in single stock options, a popular vehicle for retail investors looking to place leveraged bets in hopes of outsized gains, has shot higher in recent weeks, with a 10-day average daily trading volume at a more than 6-month high of nearly 25 million contracts. You're watching Business Edge. A quick break, and we're back. The abbreviation SME stands for Small and Medium Enterprises, but there is nothing small and medium about them. Research by PricewaterhouseCoopers indicates that 99% of South African businesses are SMEs, accounting for 52% of GDP and 29% of all employment. In Nigeria, SMEs are even more vital. 96% of businesses in the country are small and medium in size. They make up 49% of the GDP and 84% of employment. But this isn't exactly surprising. Anyone who has spent time on the continent can vouch for how entrepreneurial we are as Africans. The African Development Bank estimates that out of every 5 Africans, one of them has a business, which means the opportunities are endless. My next guest, Nkiru Amadi Emina, is the co-founder and CEO of Pivo Africa, a financial services company that serves vendors in the logistics space. She joins us now to discuss the role that fintech startups can play in solving some of Africa's age-old problems. Nkiru, welcome to Business Edge. Thank you so much for joining me.
Hi, thank you for having me.
So you operate in the logistics space. So let's start the conversation from there. When you look at the Logistics Performance Index, it ranks Nigeria as the largest economy on the continent, behind Ghana, Togo, South Africa, and even Egypt as well. So starting the conversation from there, why do you think the most populous country, the largest economy on the country, is still just not getting the logistics issue right?
Yeah, thanks for that question. There are really 2 reasons primarily that are responsible for that. The first reason being that I think data says that it's just really expensive. Logistics is just essentially really expensive in Nigeria, right? For every product that is made, the logistics cost that goes into producing that product is about 80%, if not 90%. So the fact that logistics is just super expensive, layer on top of that, the fact that we have, infrastructure issues. So, moving cargo from one point to the other, we don't have the road network to support the same. We don't have the infrastructure to support the same. So these are primary drivers, as to why we rank that low on the logistics performance index.
Okay, so your company, Pivo Africa, is working as a fintech in this particular logistics space. So let's start, let's bring the conversation up there. One of the biggest issues that SMEs here in Nigeria, in Ghana, in Rwanda, in South Africa, in Kenya, across the continent face is access to financing and credits, which is why you've seen that fintechs are really finding a space in people's hearts. So with the Credit Bureau Association of Nigeria, they say that only 4% of the 40 million SMEs in the country have access to credit. So maybe I'll start with you sharing your own story. In starting your fintech operations and starting your fintech company, what was the situation like in getting access to credit or financing for you, even though this is really a space we see money coming into?
Yeah. So I think one of the issues though that I had experienced before I talk about the issues our customer group continues to experience, it's just the fact that there's no data, there's not enough data around SMEs that allow financial providers to adequately profile the SMEs, risk profile the SMEs, determine their credit worthiness, right? And so because of that lack of data, SMEs as a group are just essentially seen as high risk, right? High risk and volatile. So that's the experience, that we face. That's the experience a lot of SMEs face. Because there's no data around SMEs, around the business activities that SMEs do, makes it very difficult to risk profile them, and as such, makes it difficult to adequately access credit. So that's essentially like one of the challenges that we faced. If you bring it back to logistics space, on top of the fact that there's no data to profile these SMEs, there's also the struggle of having to deal with long payment terms, right, from their end customers. I pick up a cargo, I deliver it, but I'm not going to get paid until after 30 days, right? So even that alone provides a significant lack of liquidity that's needed to drive and power the activities of these businesses, right? So yeah, those are my 2 cents.
Okay, so let me ask for your 3 cents now on this. So when we look at the explosion in fintech, as I said earlier, fintech is really what takes the lion's share of investment in startups on the continent. We've seen that they're really solving a number of solutions. You came in, people comes in to solve the fintech or solve the logistic issues with vendors in this space, a little bit niche. But we see that there's plug and play. We're seeing African solutions to these problems using technology. So let's expand a bit more. In the space you're in, what problems do you see fintech solving for particularly small and medium scale businesses?
Yeah. So for the space that we're in, what we typically see fintechs trying to solve is essentially 3 things. Of course, first and foremost, access to credit, because a lot of these businesses need credit, need liquidity to grow and scale, right? The second thing that we also see fintech solving is payments, right? Whether payments from a primarily B2B perspective or B2C perspective, right? And when you think about payments, what that means is, can we help these businesses easily make payments? And can we help these businesses easily collect payments, right? The third thing that we also see a lot of fintechs solving is accessibility and affordability when it comes to financial services. So you see fintechs that are more keen on bringing financial services closer to the customers, right? So yeah, those are the 3 things: accessibility and affordability, access to credit, of course, and thirdly, the ability to facilitate payments.
Okay, so let me bring up a gendered aspect to this. You're a female founder in a space that remains dominated by men. And research says that while startups started by men get more money as investment and seed money, it's startups that are women-led or women-owned or have women-led management teams that end up performing better in the long run. Do you think fintech solutions are taking into consideration sort of the gender disparity in this SME space as well, even though a large number of SMEs across the continent are owned and run by women?
Yeah, I think there are a lot of fintechs that are taking into consideration this sort of like push for gender diversity, this sort of push, this gender lens approach into how they deliver their services and who they want to serve. Fintechs are doing the same. There are also a number of investors that are doing the same as well. And as you can imagine, the primary reason for that is statistically, it's just known that women tend to run businesses much better, right? And so leaning on that statistics, there's now a push to increase support, increase access for a lot of women-led businesses.
With all the challenges Nigeria faced, in the first quarter of this year, Nigerian startups raised about $600 million. And that's really a lot of money. So what is it, do you think, about companies operating in the country's ecosystem that tends to make them so attractive to investors? You can even share any personal stories you have.
So what I think really is just, I think investors are starting to see that there's a lot of opportunity that exists, on the continent. One of the key drivers for the fact that there's this realization of this huge opportunity is that there are so many problems that are yet to be unsolved. There are so many problems that are being solved and being solved in a unique way, right? I always say that one of the advantages of a Nigerian startup is that, or an African startup, is that our problems are so unique, and you have to be innovative, right, around how you choose to solve that problem. And yeah, I think that's primarily the reason why there's now the realization that this is such an opportunistic land. It's also really nascent as well. And the best time to really come into a nascent land or opportunity is when, as you can imagine, it's not heavily tapped yet.
All right. And finally, Nkiri, before I let you go, we like to look at trends as well. Even though more than half of 2022 has gone, it's still a year where there are continuing supply disruptions from COVID-19. The Russia-Ukraine crisis has added its own burden to it. In terms of fintech development and solutions on the continent, what kind of trends do you think we should be looking out for?
Sure. I think the kind of trends that we should look out for is, of course, there's now going to be various approaches to increase access to finance for SMEs, across Africa, whether leveraging decentralized finance as a protocol, whether leveraging, various data sources to better understand these SMEs and lend to them better. I think there'd be a lot more financing opportunities that would be explored. I think in addition to that, there would also be a lot more opportunities around B2B payments.
Oh, okay. I think the connection there got lost, maybe in translation. My guest, of course, for this segment, looking at how fintech is helping African SMEs was Nkiri Amadi Amina, the co-founder and CEO of Pivo Africa, which happens to be a financial services company that serves vendors in the logistics space. It's difficult to ignore the power and the potential of fintechs, particularly to bridge the financial gap that exists across the continent, but they're also providing solutions to many challenges for SMEs across the continent. We're going to take a quick time out. When we come back, we'll be wrapping things up with, of course, a conversation with Ola Atoshe, and we'll be looking at the Nigerian burst with plans for a blockchain-enabled platform, and NC4 to watch comes your way as well.